Hello, traders. This is Blake Morrow with Traders Summit. And for the very first time, I have a special guest, Dirk Friczewsky. How are you, Dirk?
I'm doing well. I'm fine. Thank you very much for having me on, Blake.
You know, it's nice to have you here. And by the way, Dirk is the president of Friczewsky Financial Markets. You know, I've known Dirk for, about, I want to say about 10 years, maybe longer than that, via social media. We've never spoke in person up until recently. And I have to say, it's a pleasure to have you here. I'm a huge fan, been a longtime follower. You and I have communicated a little bit from time to time on social media via Twitter. And I know you're I have a lot of respect for what you do in the markets, but I want you to actually explain to the traders out there that are listening to you for the very first time. I'm sure many of you know Dirk from Twitter, but because you're FX Dirk on Twitter.
Right. Yeah.
But tell people about yourself and what you do.
So first of all, it's a company. You got to have a view at that one. Friczewsky Financial Markets is let's say a consultant company giving brokers a little bit of help for their clients, something like seminars, webinars, stuff like that. And there's the other one. It's FX Dirk himself trading his own book, his own stuff. Nobody's money, it's only my money. I'm not trading for some kind of a wealth company or wealth advisor, nothing like that. It's my own money, it's my own account, trading stocks and trading currencies.
Well, awesome. And you're based out of Germany.
I'm based in Wiesbaden. It's close to Frankfurt, so close to the heart of the Eurozone. And if you just have a look at my website, germantrading.de, you will find out a couple of things more. Of course, and most of the stuff is in German because the typical German client base. But the rest of it, for example, my YouTube channel is in English, and my Twitter handle, FX Dirk, every single trade, every single tweet I made is English from the beginning on. It's simply due to the fact from my time in New York City.
Awesome. Well, it's great to actually have you for the very first time on Trader Summit. I can't wait to do more interviews with you in the future. But let's talk a little bit about the current environment. I mean, in the current environment, we've got the euro that's, it looks like it's been stabilizing as of late against the dollar. The dollar was predicted by many banks and many economists that the dollar was going to continue to really strengthen in 2022. But here we've got the euro that's rallied pretty hard from the 111 level up to 115. And, we've pulled back a little bit in light of recent events regarding Russia and Ukraine. But overall, how do you feel about the euro dollar and where it's going to go? And try not to be biased since you're in Germany.
Well, just looking at it as something like a neutral position, looking at both sides of the story. First of all, I would say something like a sentiment. Everybody is running in one direction, bullish on the dollar all the time, way too much, just from my point of view. And that's the reason maybe it just turned around. That's one reason. There's so many parts of it, from the fundamentals, from the technicals, from stuff like the yields, from stuff like the possible rate hikes, from a turnaround, even just from the first wordings from the ECB as well. So many parts of it, of course, very confusing for new buys, very confusing for the first beginners at the Forex markets. So you got to add a lot of stuff, not only have a look at the chart technical patterns. On top of that, you got to be having a look at, for example, the negative yields as well. So yeah. Everything comes together.
So let me ask you this: like, if you look into the future, like let's say we get past like the Russia Ukraine situation, and it kind of dies out a little bit, and we find like an easier way out of that situation. How do you feel about the euro moving forward? Do you feel like the euro is is it a viable solution for the Eurozone, or do you think it's going to be a failed experiment moving forward?
From the current perspective, talking about the future rate hikes from the Federal Reserve, you got let's say, a difficult position for the Eurozone, especially when it comes to stuff like the inflation numbers. You got to see that, of course, the US is one country. The Eurozone consists of a lot of countries, and that is the problem. We got something like Estonia with a inflation rate of 12% on a year basis. And you got something like little island of Malta having something even sub 3% inflation on a year basis. And you got to melt all this stuff together. And then it comes to the Eurozone with 5.3 and 5.1% on a year basis. So there's a lot of trouble for small countries. There's a lot of trouble for the southern countries like Italy, especially. Even on top, of course, Greece and Portugal. So the high debt countries with really loaded with debt. And then, of course, on the other side, so the northern countries like Netherlands, Germany, even Finland, stuff like that. So it is not easy to combine everything together. And I think it's very difficult for the ECB to hike the way they are talking and to hike possibly the same the Fed is talking. But of course, I got to say, we spoke about that last time when we just had a chat. It's something very different of something like this typical saying, talk the talk and walk the walk.
Yeah.
So, I mean, they got to do something if they really start hiking, like the Federal Reserve said. And they are talking about 50 basis points, then the next 25 basis points. And we are possibly reaching 1% at the end of the year. So, well, that sounds nice, but 1%, compare that to the history, is still nothing.
Right.
And it's still a joke if you compare that with the current inflation rates. This is something like a little bit of a relief for the consumer, but it's in the end of the day, it's nothing.
Yeah. So, but in the Eurozone, like you pointed out, it is going to be very tricky for the ECB to move rates when it's going to have different effects on smaller countries versus some of the bigger countries, and some with surpluses, some with deficits. So how does the ECB navigate through that? And more importantly, you know, as traders, when you're looking at the euro, how do you reconcile that? And where are your trigger points if you're going to be buying or selling the euro? Let's just say in the near term, over the course of the next couple of months. You have some charts that you might want to show us as well, right?
Yeah. Before I just show that kind of a chart, for example, I would simply say it's nothing like a wealth advice or a trading advice, and it's nothing like immediately hit the buttons right now when I say stuff like that. But from the long-term experience, all the years, if something happens like a euro, for example, has a ECB decision or a Fed decision day, and something happens like the euro US dollar rate is going up 0.8%, 1.2%, 1.5%, that's definitely an invitation of the Forex market to short the euro US dollar. Because every time the euro goes up, strengthening up, it's just a new way just to have a nice next setup to short the euro. Because you got to know from the whole Forex market construction, the dollar is the big part, yeah, from the percentages.
Right. So let's say that the Fed, you know, I know expectations right now are pretty lofty when you're talking about Fed, you know, the FOMC expectations moving into 2022. You got some banks that are looking at, you know, maybe, you know, 1.5, 1.7% rate hikes in 2022. You have some that are going to come in less than that. But does that factor into your decision making when you're dealing with the euro dollar as a whole?
It's one part of the story. When it comes to trading and to trade the euro US dollar, you could do also something like having so-called shots into that kind of a short system. I often do that I simply add the first position. This is something like I already showed that on one video of my stuff, just dipping the toe into the water and just to try to figure out, is it already cold, or is it still cold, or is it more comfy for me? And when it simply moves in the right direction, you got to have a really good feeling. You just simply add to that kind of position. This is something you could do. And this is something like you could manage later on. So you manage a trade, you have the first shot is still in a negative territory. It often happens. And the second is already in the comfy zone and has something like already positive numbers. You can easily manage that and put, for example, put the stop losses into the next direction. For example, having something like a comfy feeling about a free trade. If you have the possibility to just have that stop loss just way behind your entry costs and behind your entries, you have something like a free trade feeling, and that makes it very, very comfy for you. You just have that trade out there, and nothing could really happen. So that's the thing. You possibly manage stuff like that as well. You could do that with stocks on top of course, as well.
Yeah. So Dirk, explain to us what you're looking here in the euro dollar and what technical levels you're looking at and what your chart represents there.
First of all, that's a long-term picture. Of course, you got to see that software stuff like guidance here from Germany. You got the long-term high here from the last 2 years. So regarding that one is the 06 of January 21, and you got this one 23.94. You got something like a Fibonacci retracements, all these kind of white lines you see. So it's the typical Fibonacci retracement analysis. The FIBO analysis going down to that 1.11.20 low here. And the platform is building that kind of stuff here. So you could have something like so-called reaction zones. Is this something interesting for you? Is there something, we are heading around 113.17 right now, just because of that Russia-Ukraine story. This is something like a typical move in the dollar. It's a safe haven play. So of course we are going into the weekend. On top of that, we got President's Day on Monday, markets are closed. And on top of that, all the stuff together.
Yeah, a lot of people that are just taking risk off going into the weekend because they're unsure of what might happen.
Right. And you could have an analysis on the long-term view. So that's these are the white lines. And on top of that, you got this, let's say, a little bit more short-term. So you got the last low, of course. So the longer-term low is the 1.11.20 and have the 114.94 high. So you just put that on the other direction to have something like Fibonacci projections to the downside. Where could this trade or where could this currency pair possibly move? So this is something like the projections show you where could this trade possibly head to? Where could I possibly take out my positions? So this is nothing more than just a tool, but gives you the possibilities to check where are we going to, where are we possibly heading to. Absolutely no one should open a position without knowing when to take it out. You better should know something like that. So every time you open a trade, it's better to know when to exit or putting money off the table or half of it or however you want to manage it.
Yeah, well, as traders, I always tell the traders that I work with is, whenever you're taking a position, you always think about where you're, at what point do you need to get out? Like worst case scenario, what point? And that's the first thing you should be asking yourself when you get into a position, right? Where are you wrong?
Right.
All
so
right.
the thing is, it's the same thing in everyday life. You got to have goals, targets somewhere. You got to fix, this is my target. I want to go there. I want to head out there. So if you don't know anything about that, you don't know when to enter, when to exit. Well, this is something like, possibly you're absolutely looking into the abyss already, because you will end up there without knowing stuff like that.
Right. Okay. So on your charts, I see the blue line represents a 100-period EMA. You have the 200-day EMA. That's the red line above that. So why do you look at an EMA versus an SMA, like a simple moving average, and you're looking at an exponential moving average?
Yeah, it's a typical use just to see if something is way on top of that, besides the relative strength, and it is something is moving away longer term from the average. Maybe on top of that, that gives you some kind of implication. Oh, this could possibly be something like we are turning around. I can possibly smell a little bit something like relief on a reversal. So this is the only thing. It's just a long-term view. You could do that on a 4-hour basis, talking to day traders or to that so-called tick traders. I don't do stuff like that. I don't use minute charts, 5-minute charts. The maximum I go low until €1, 1 hour. And mostly I just have a look at the 4 hours and the daily, just because of the reason that you see a picture and you see where it comes from, and you can see something like a trend. You don't see trends in 5-minute charts. From 1 second to another, something happens. There you go with a trend.
Yeah. So I hear what you're saying. So looking at the euro, what are you thinking from here, like real time? Where are you thinking? Hey, I think we're going to find some support, and where's the really key resistance that if you're watching the euro that you should be looking at?
I would simply, from a bear perspective, from a euro bear perspective, and as I'm still the euro bear, so shorting the euro US dollar is something like still with a target of a retest of that 1.11’s. So just because most of the time of the story there, you got to have something like a second leg. And the second leg is possibly trying to test the long-term, or let's say the longer-term low at the 1.11’20. It could, the typical market stuff, it could possibly end up with 1.11’21. For some reason, some guys protected, whatever. No, yeah. It could easily be something like the typical retest of the 1.11’20, be taken out for a couple of seconds and be snatching back up to 112 again. So we all saw that stuff in the last years. Every day is trade is life. Stuff like that happens all the time, and that's the business. In the longer term perspective, I don't think that we are going down to 105 and to parity, because we all do business together. The Eurozone with the US and the other way around, and nobody has something like an advantage when it goes that direction. We had it already, but I don't think that it will happen again this way.
Okay, and so at what point do you say, you know what, I'm going to turn into a euro bull? I think the euro is going to make a much bigger, broader move higher. What's that trigger point for you technically?
Technically, when we just bounce back into that 114 level, and just to have that green area, I just marked that. I just have to look at the screen right now. That's the reason why I simply don't have a look at you.
Yeah, no, it's fine.
The green neckline is something I describe as a neckline, trying to get back to this kind of the lows we saw here around the 115.30s, for example. And this would be something like a breakthrough scenario to the upside for me. All right.
All right. Well, that's awesome. All right. Well, Dirk, I want to say thank you so much for spending this time with us. I'm like really excited about being able to have, conversations with you from time to time, getting your take on the euro, the Eurozone, and getting more of I want to say boots on the ground type of view of how you're seeing the Eurozone as a whole. And I think it'll help those of us that are traders, which, a lot of us here in the North America or in other parts of the world, we would tend to be more dollar centric. So having a European viewpoint is always a great point of view, in my opinion. So if I'm a trader, I'm at home and I want to find out more about what you do, tell us how to follow your work.
Possibly is something like the typical Twitter handle, FX Dirk. From time to time, simply post entries and exits from the euro US dollar trades, for example. And regarding the stuff I do for companies, is the reason I do it for companies. I don't do it for private traders. So for example, you could be something like a client, of course, of a broker, of an institution. And in that case, you could be having something like a webinar with me, of course. That kind of stuff is, of course, is in German. So for the English-speaking audience, I simply can offer something like an invitation for let's say for the next trading battle, for example.
That'd be great. And by the way, if you guys haven't checked out his YouTube channel, in the description on the Traders Summit site, just down below, you can click that, get to Dirk's YouTube channel. I suggest that you do that. You've been posting pretty much once a week as of recently. So I'm excited to get more from you and your views from you from there.
Yeah, thank you very much, first of all, for having me on. And thank you very much on top of that for advertising. And the special thing about that YouTube channel is I simply try to keep it that way with a once a week, because every time you do something like that, it takes time. being something like a busy bee all day long, of course, it's not there's not much time left for stuff like that. We try to do that at the weekends to have something like a longer term view on a special market, a special place.
And I'm going to tell you from experience, from personal experience of following Dirk on Twitter for the last 10, 11, 12 years. He tends to be more active in the European market. So if you're a European trader, like by the time I get up and I look at what's happened on Twitter, Dirk's already been in and out and already booked some profits and he's gone. So make sure you follow him. And Dirk, I want to thank you very much for being with us today. And like I said, I look forward to spending more time with you. If you're watching this on YouTube, make sure you give Dirk a like, give him a thumbs up. Subscribe to the YouTube channel so you don't miss any of our content that we do here on Trader Summit. And Dirk, we'll see you soon.
Thank you very much. And every thumbs up is appreciated very much. Thank you very much, Blake.
All right. Thanks, Dirk. Hey traders, Blake Morrow here. Thanks for stopping by our YouTube channel. Don't forget to like, share, and subscribe to our channel. Also click the bell notifications so you do not miss any of our market-related trading analysis from some of the leading industry experts. Thanks for stopping by. We'll see you in the next video.